Brilliant. Good afternoon and welcome to another edition of the xCollective. It is a privilege that I host today Ian Tidswell from Ideal Price, and we're going to talk about pricing and how underutilized of a growth lever it is for many businesses, and that you can actually use it to your advantage, especially now in a downturn and with all this volatility in the market, to shift your focus from top-line growth to profitability. We're going to talk about this today. We only have about 30 to 40 minutes, so I think it will be a challenge to fit this comprehensive topic in such a short time. But I'm 100% convinced that we will either do a follow-up or you can consult Ian, obviously, for more details on this matter. Ian, thank you very much for coming. It's a pleasure to have you here today.
Thank you, Pierre. Pleasure to be here.
Cool. Thank you very much. Pricing. We've been talking about this a lot in our sort of preparation call for this session. We see that a lot of B2B organizations, focus on volume and try to build a factory, like an efficient go-to-market machine, purely focused on, growing new customers. And obviously, it's become more innovative and more novel, if you will, by also seeking, expansion potential, focusing on net dollar retention, and it's starting to become more of a blended approach. But still, we find a lot of go-to-market organizations really focused on driving up the volume of accounts and customers that they serve, and obviously also about expanding these customers, but that pricing is then often left as an afterthought in how they can actually increase their value. Or actually capitalize on the value that they create for their customers.
Yeah, I mean, excuse me. Pricing is how you get paid.
Yeah.
Right? That's the only way you get paid, actually. So all the value that companies do and all the benefits they bring, the only way they capture a fraction of that value is through pricing. So said like that, it sounds obvious that you should spend a lot of time on pricing. I think the challenge is lots of companies, it's like football. Everybody can play football, but not very many people are Manchester City, to use a recent example. Right, so the basics, kicking a ball around and getting in the net, super simple. But doing it well and doing it well enough to be successful is super important, and particularly so if you're sort of trying to climb the hill of growth, right? Because that makes it much harder. You kick the ball uphill, it rolls back down again. So you got to. My analogy will get ahead of me here, but that's the
cool. We'll be diving into this subject. Like pricing fundamentals, how you can devise your pricing, and also how you can operationalize this further within your organization as an early stage growth company. But before we do this, Ian, please elaborate a little bit on your background and your drivers currently with Ideal Price.
Yeah, so I've been doing pricing for about 20 years. I started off in one of the pricing software companies selling to large enterprises. So I was myself in a growth company for that phase, for that period. I've worked in small and large companies, and through working in pricing, I've come to love it. I'm a pricing geek, right? I think you are a bit yourself, right? Yeah. It's a multifaceted. It's very simple on the outside, but very complicated when you get into it. So it's endlessly fascinating. So I've been working as an independent consultant for the last 7 years or so, and for the last 5 years or so, I've been working with lots of startups and scale-ups. I work through the Swiss government has a coaching program for startups, and I'm one of the pricing teams for this, coaches for this. And it's super fascinating. I love it because it's super interesting. But that forced me to try and come up with a way of helping companies with their pricing that is very efficient, because they don't have the resources to throw 100K at a project, right? So it's all about trying to do pricing in a way that's more through coaching and more really making sure the skills are delivered. So yes, we'll do the important one the first time round, but then they've got the skills, the frameworks, the tools to keep doing it themselves. That's sort of the mindset of what we did. So I work multiple companies at the same time, doing light touch engagements, and just absolutely love it. I'm always learning.
Cool. Sounds super exciting. And Ian, tell me, like, obviously, you are an expert in this field. You've been working on this from multiple angles now, working with so many different companies. What is the difference between companies that get it right and companies that don't? from a business performance perspective?
I think it's integrating that pricing. It's keeping the pricing muscle exercised is the biggest thing. I see. It's easy to play a pickup game of football, but you won't be very good if you don't do it very often. So you've got to practice. Not practice, but you've got to keep doing it. You've got to keep playing. And so it's this integrating pricing and the right ways of thinking about it throughout the product design process and then in the selling process as well. That's the sort of maybe the sort of mindset is thinking about, is pricing influenced by every decision? As you're making a decision, is pricing something we need to factor into this decision? The next level down, if you like, then is always keeping the customer in mind.
Yeah.
So there's a tendency for companies to worry about the cost because the cost and their own product and the value proposition of it is right in front of them, right? They see that every day. They're selling something. They see the thing sitting right there. The customer, especially when you're in the product phase, with this sort of mythical thing in the distance. So really trying to get under the skin of the customer and understand why they buy and why they don't buy.
Their perceived value and what the drivers are for them.
Well, they offer and the value the offer brings, and therefore how much price can we capture?
Exactly.
Right, and so you can't disassociate. Pricing should not be thought of as a separate thing from the offer design. It needs to be, integrated in there, at least conceptually, right? Yeah.
And why is it so important to get pricing right and to be very, like methodological on how you approach pricing?
Well, what I see is a lot of high growth companies and companies that aspire to be high growth, because they're not always high growth, is that they the pricing. If you get pricing wrong, then you're either going to give away value on one side if your price is too low, or you're not going to have any growth. So it's I use a flywheel analogy when I do classes and workshops on this, and pricing is one of the things that can stop that growth flywheel from really taking off. If you think of the Amazon flywheel, right, coming up with a good offer that's valuable, pricing it right drives sales, which drives investors to give you money, which means you can build more products and build more capabilities, and you really got to get that flywheel going.
Exactly, and also not underestimate that it's actually entangled in your entire go-to-market strategy, right? Because it's not only about the price that you charge, it's about how you package it, how you position it. That will dramatically also determine how efficient your go-to-market approach will be. Yeah,
of course. You can have a great product and everyone loves it, but they don't. If the price is too high, they won't buy it. Or if the price is too low, I mean, there's also price signals value as well. So if you price it too low, you may be saying my product's not. The message customers can get is my product's not very good. Right. So I see one of the mistakes, and we'll get into some of this in the conversation, I think. But one of the mistakes that's made is, so people are too afraid of low price at the beginning sometimes. But that low price needs to be anchored off a high price that is the value. So you've always got to be anchoring back to value. If you're doing anything in the least bit disruptive, you've got to be anchoring back to why it's worth being disrupted.
Clear. And if we look at some of the trends and developments that are going on, obviously there's been a big shift now with the recent, let's say, macro-environmental things going on, and specifically the economy with higher interest rates, higher cost of capital, and so forth, that we saw a lot of SaaS companies that came into this world over the last couple of years actually operate with an unprofitable go-to-market strategy, for which pricing is probably part of it. Would you say that SaaS is typically underpriced and that we're now moving to an era where companies will be more diligent on how they price their solution, or probably don't have a right of existence?
So, I mean, there's a certain level of weeding out will happen in the current environment, right? It's a tougher environment, and so companies that don't have a strong value proposition or have big barriers to value are going to struggle, right? That's really clear. If you don't have the value fundamentally, and what is value? Well, we talk about that, but if you don't have the value, then you're going to struggle. Assuming you're creating real value, then understanding that value, that gets into that is the foundation for getting your pricing right. And what's changed now is, I mean, you mentioned it was actually interesting listening to your setup there, because it was very much sort of investor focused, right? The other thing that's going on in the market is that the inflation is high. So in a sense, there's an opportunity to raise prices now because people expect prices to go up.
Yeah, exactly.
But a lot of companies don't have the mindset, because for the last 10 years or so, there's been no inflation to speak of, right? So everyone just, coasting along with the same price is okay. Doesn't make sense now. The other thing I'd say is that as companies grow, their value proposition and the barriers to adoption, the barriers to value change over time. So you've got to stay on top of those. So some companies end up in the situation where they've gone for 2 years and they realize they've been undercharging for those 2 full years, right? And,
but it's also organic part of a growth journey of a company, because you start with a product and you claim a certain value.
Yeah.
And as you mature, the value that you offer by adding additional features or products or what may, dramatically increases the value of your offering. And should. Of course. Yeah. And so I think this is also one of the key challenges for early stage companies, is that as your product evolves, you need to evolve your pricing alongside with it, which can obviously be quite complex.
It's complex and it's not complex. If you've got the right model to think about it, it's really not that complex.
Okay. Well, let's talk about that in a second, of course. How do you view actually price increasing on existing customers? Because it's quite a hot topic of debate. Like, should you do it? Should you not do it? What is your standpoint on this?
Well, the irony is that the customers that use your product are the ones who are your most loyal customers, are the ones who probably get the most value. So these are not the customers. These are the customers who are quite willing to pay more, or no, maybe quite willing to pay more. Yeah. Right. I mean, the example that comes to mind is Netflix. So it's a consumer business, but Netflix in the last 10 years has just about doubled their price and has 5 times more consumers. So they have a bigger portfolio of products and the like, of shows and things, right? So their value has gone up from that perspective. Yeah. But the reality is, every time they raise their price, they get a little loss of customers, but the loyal customer, it's more than offset. I mean, the numbers around pricing are such that, it depends on your cost structure, but if you raise price by 10%, if you lose 10% of your customers, you come out ahead, right? Now you do the math for your own business. Yeah, of course. But,
it depends on price elasticity and market.
No, well, that's not price. This is even before price elasticity. This is just the economics. You raise price 10%. You have some costs associated with serving those customers.
I see. Yeah.
So you can, if you're selling a real physical good, then these economics are really, really huge, right? So a 10% price increase, you could lose half your customers in some companies and still be better off. Now, there's other reasons why you might not want to do that. But this pricing is such a high lever. It's so important to the profitability that it's super important to squeeze everything you can out of that particular item.
Yeah, I see what you mean. And I think there's a research by Harvard that reads that 1% price increase on average results in 11% bottom line profitability improvement.
Just simple maths, actually.
Yeah, exactly. Of course. Yeah. In early stage companies, before we dive in, setting your pricing strategy and all of this, in early stage companies, who owns this process?
The commercial leadership team.
Commercial leadership team.
Yeah. So one of the reasons pricing hasn't, sales and marketing best practices have really developed, and they're sort of well established. I mean, I think RocketX helps companies with this, right? Because there's well established best practices that work across different companies. Yep. What you find in pricing is, because it's kind of a skinny function, you don't need as much work on it. There's not that same place for it to live. So
on an operational level.
There's no role in a 20-person company. There's probably no head of pricing.
No. Right. Doesn't make sense.
There's never a head of pricing. I mean, in fact, you need to be at like 1,000 people before they start to have people with pricing as a dedicated role. Yeah. But you need to. This is sort of more when you get to scale. But otherwise, it's really in marketing. It's the first place to put pricing, I think, because marketing owns the product and owns the value. Or product marketing, I should say, product marketing owns the value of the product. Right. They should be coming with the value proposition, and therefore they should be responsible for how that value proposition is captured, i.e. the price.
Okay.
But pricing is fundamentally is a team sport, right? So you also have finance have to be involved and sales has to be involved. But the natural place for pricing, if you're not having an individual pricing function, is, I think, product marketing.
Okay, clear. Thank you. Well, let's dive into, how to set pricing from a point where you are currently at. You have a proven methodology that you work on together with your clients, right? How do you get from I have no clue to a good scope, like a good hypothesis on how to set your pricing?
Yeah, so I have this, we use this methodology called ABCD. It just happened to be ABCD.
Yeah, conveniently.
It can be, it's funny that, isn't it? So A is ambition. So it's very important to know where you're trying to get to in the context of where you are, right? It would be great to launch a new consumer brand, but if it's going to cost you $1 billion of marketing, maybe that's not the way you should go with your with your $2 million in the bank, right? So that's sort of setting the context of, are you trying to dominate the Netherlands or are you trying to dominate the world? That changes how you're going to look at things.
Yeah, of course.
Then the second part is really designing the pricing blueprint. But to get to the blueprint, you've really got to understand value and the barriers to value. So what I always recommend is start with a very narrow focus. Start with who is the ideal customer? Who is the customer who would be kind of stupid to not buy your product or your service? Think about then what are you going to sell them? So you'll change this, but this is a first pass to make it concrete. And then what's the next best alternative? So that's actually there's an acronym for this too, CONVERT, right? So that's the customer, the offer, and the next best alternative. So now we've defined this is not your whole marketing plan at all, right? This is the core of your customer base, but it is just the core. It's not meant to be the whole thing. And then from that core, we think about the VERT part. So VERT is the value. So what value is the customer going to get out of your solution, your offer? And we can dig into that in a second, maybe.
Yeah.
And then there's the 3 barriers to value. So the reason people don't buy is because of the effort or the investment or the changeover effort that's required. R is the risk. So will it work? Is it going to cost more to operate? Will the company, in small companies, will the company even exist in 2 years' time? I have a couple of crowdfunded things I bought that don't function because the company went under, right? And now
exactly.
Useless piece of plastic.
Operational risk.
Yeah. And then the T is the time to value. So it's great. Your thing may be great, but it's going to take me 2 years to change my whole processes so I can adapt it. Then maybe I'm not going to bother. So understanding the value and these barriers to value, and these sort of form a big check mark. It's sort of, you look at it over time. I think we'll put some visuals in with the notes, right?
For sure. I think it would help.
Yeah, I think it's like a big check mark. So you have to invest, you go down, and then the value comes up as you go up. So understanding that from a sort of a base case, then you're in a great place to do your pricing, right? And then the pricing is about, the sense of what is pricing, right? Pricing is not $19.95 a month. It's the elements that, $19.95 a month for what? For a user, for a team? Are you paying an upfront fee? Maybe there's some upfront costs. Maybe it's just a flat subscription.
Yep.
Maybe it's pay per use. So it's the amount you use it, you pay more. Or maybe it's some outcome based. Every time you get a sale, you get a commission, right? None of these is right or wrong. They all have different uses. They all have different value. And each of them has a different impact on the value you capture, the effort, the investment the customer has to make, the risk they feel, and the time to value.
Okay. Well, I think this structure is really useful, but how do you get the inputs required to do such an exercise? Because from my experience, the only way to, you can do a theoretical exercise, but you want to speak to your customers, you want to get their input. You want to see, what the input is from your internal organization on the pricing structure, how it works with sales and so forth. So it's always an ongoing matter, of course, but where do you get this input from? Like, how should you approach something like that?
Yeah, so I I'm very hypothesis driven. My hypothesis in these cases is they know their business fairly well. And so let's write down these things. Let's use use the information that's in the heads of the team and write down what we believe. And the trick is not to stop there. The trick is then that's actually my A, B, C, D. C is the check, right? So then you've got to validate those things. The reason to do this is because it's super efficient to be hypothesis driven. You just have to, people get a little afraid of hypotheses, but you have to be willing to change your mind based on when you get new facts. You have to go make sure you get the facts to back it up, and then you've got to be willing to change your mind. But for early stage companies, they don't have the resources to do a lot of market research, and they don't have any transaction data. They don't have a history.
Yeah.
So now when you get to scale-ups, then it is worth looking at whatever data they've got lying around, right?
Exactly.
Which is whatever market research. Customer satisfaction is a really useful survey. Regular customer satisfaction surveys are super valuable. Because if you ask a question, if you ask your customers if your product has good value for money, the first time you get a number of 6, you don't know what to do with that. But when you see that number's gone from 6 to 7 or 6 to 5, that tells you something about the trend, and then you can start to get more.
Exactly, and then you do more qualitative research, speaking to customers, understand, exactly what are their barriers.
We could do a whole podcast on market research, about pricing market research, right? But it can be as much as just doing simple willingness to pay interview. And you can do, if you do 5 of those, you'll be a lot smarter than if you've done none. And if you do 100 of them in a survey form, then you'll be smarter again. But don't let the 100 get in the way of doing the first 5.
Exactly.
And then you can do fancy stuff with conjoint and things like this, right? But and those make sense. Those make a lot of sense to do. But you don't need to do those first. I mean, a lot of testing is getting prices out in the market. If you have prices out in the market, then you're really going to do a good test. Right?
Yeah, exactly.
And then there's ways to design your pricing so you get more information. Like A/B testing is the classic one, but even in cases where A/B testing doesn't work, there's lots of other a couple other things you can do.
And then there's obviously also the competitive aspect to this, right? Because you can set your pricing, but if a competitor does A, B, or C, you may want to revise it a little. When and how should you consider, let's say, external environments into your pricing strategy?
So the competitor is the next best alternative, right? That's so when you've got a direct competitor, the next best alternative is going to be that competition. If you're running a gas station, then the gas station down the street is the next best alternative. And it's very easy to figure out how you should do your pricing, right? Because who cares? When you are selling something really innovative, then your next best the next best alternative for the customer may be something totally different. I was talking to a company just this lunchtime that uses augmented reality and AI in the construction business to sort of do augmented, when you're building a building, or designing some furniture or equipment, then how can you sort of change the process, right? In their case, the next best alternative probably is the existing process. Yeah. So then you don't worry so much about the competitors. Then you're worrying about your value, your overall value, and does it make sense?
Exactly.
If the next best alternative is somebody that looks very close to your competitor, then you've got to worry about the competition a great deal. If you're selling something that is more a configured or a customized solution, then you do need to worry about your costs a lot. Right. So we often have these conversations talking about cost plus pricing, right? So cost sets the floor to the price, right? You can't sustainably sell it below cost.
Of course.
And customer value sets the ceiling, because you can't sustainably sell things to people who don't get the value out of it. You can in short term, you can do all of these things, but in the long term you can't. And so the competition sets where you fall in that range.
Exactly.
Right, and which one of those is more important? That's one of the things you have to figure out very quickly, because your pricing strategy will be a bit different. One may be a fast follower. So if you've got something that's incrementally different than the competition, then you need to worry about, especially if you're growing and you're the not the leader, then you need to worry about where they're going and follow them.
Yeah.
But always adding that value on top.
And if we talk about value, you mentioned something interesting at the start when you introduced this convert framework, and you said value comes in 5.
Yeah, what is value? Yeah.
Exactly.
Yeah.
Can you elaborate a little bit on what you mean with this exactly?
We came back to that. Yeah. So talking about, I'm going to talk mostly B2B or B2B2C because consumer is simpler but more complicated. That's really helpful, isn't it?
Let's stick to B2B.
Let's stick to B2B. Yeah. Exactly. I can say one sentence about B2C afterwards. B2B. So you can basically help when you're selling to a business, a service or a product to a business. You can help them in 5 ways, at a sort of 5 groups of ways. So one is you're cheaper now, right? So you save them money in the short run. The second thing you can do is you can save them money in the long run. Right? And that's a very common one, right? So we're going to help you be more efficient with whatever process you help with, and therefore you will need less people / take less time / whatever it is. Those are the sort of the cost-based ones. The third thing you can do is you can help them grow their own business. So you help them make more revenue, sell more, help them keep their customers more loyal, or sell a better mix of products. You can help them sell a richer, a more profitable mix of products. Yep. Right? That's the one that doesn't really exist in the B2C world. So those are and these 3, you can put numbers on these. You can quantify these.
Yep.
The fourth one is a bit trickier because now we're talking more the less tangible things. So this is things like the environmental impact or the social impact, right? Everyone would
more value driven, like a core value driven.
Mission driven.
Yeah, mission driven.
Right.
Exactly.
That's right. So everyone would like to be a little bit greener, but it's really hard to put a number on how much they'll pay for that.
Yeah, and especially if it may have a contracting effect on the economics, then it's especially hard because then you need to trade off mission versus economic.
And this stuff changes over time, right? So especially in the environmental space, a lot of times it becomes a table stakes, right? So you have to have certain, fuel economy in cars, to pick an example, right, is you have to meet minimum standards. So at some point it becomes you have to do it.
Yeah, exactly.
And then all of a sudden, guess what? You get lots of money out of it. But if it's just nicer, then it's a little bit harder. Anyway, that's one of the ones. Another one that I think is super important when people are selling pilots and things is the option value. So when you're buying when you're selling a pilot, they're buying knowledge and understanding and experience so they can see whether this thing is going to make sense for them down the road. Yeah, it often comes out of a different pot of money, and there's a different way of looking at things. So, but that's oftentimes people are buying when they're investing in you early on. They're investing in this sort of concept of option value. And the final one I mentioned in this section is like risk. So it lowers my risk.
Oh yeah,
right. Yeah.
So that makes 6 in total.
No. Risk. These are all in the intangible.
Oh, they're okay.
The less tangible.
Yeah, I see.
And then the intangible one is the emotional value. It will help me get promoted. Is if you're selling into a big company, right? I'm going to attach myself to your project because I think this is how I get my next job promotion.
Yeah.
Right. That's non-trivial. That works both ways. Of course, that can be also I don't want to attach my name to it because I'm not sure it'll work.
Yeah, exactly.
Right. So,
and I think this is also this perceived cost of buying a new solution and the risk that it may bring for buyers is actually something that is underestimated in go-to-market organizations. Yeah. Because this is what we see a lot of companies actually struggle with. Yeah. That buyers find it really hard to make a decision on which vendor to work with or to run this project if it was not mandated because they have to attach their own name and reputation to it.
That's right. And it's hard work. Sometimes it's hard work. If you've got a SaaS solution that's solving a narrow slice of the value chain, then you've got to make it fit and change behavior. And I think one of the challenges in the sort of marketing driven is that you want to obviously put your best foot forward and promote the way it's going to work, but there's no talking. You've got to factor in the perspective of the customer. Yeah. Because a lot of times, yes, they might like your vision and they'll have those first 2 meetings, but they're not going to sign the thing because it just sounds like a whole lot of work.
Yeah, exactly.
Right, and I don't know how it's going to work. And will my customers be okay now I'm doing things slightly differently? Right? Yeah. All of this stuff this is real stuff they're thinking about.
Yeah, and how does it align with everything that's going on in the company? Do I want to convince this person to actually make this happen, or would I rather just stay away from it?
Yeah, and I'm creating headaches because I'm trying to. I have to change things for my colleagues, so it creates headaches for me. You know, and I become a person who's driving change, and you know, everyone thinks they want to change, but mostly they don't.
Yeah.
So yeah.
And how you come about your pricing is probably then also different for these 5 types of value.
Well, it's a matter of
right?
understanding where the value is and where the negative parts of value are as well. Because you, so very early stage companies, right, there's this risk piece we mentioned earlier, often looms quite large. But then once if you've got a land and expand strategy at a company, right? Once you've got a few users and they've seen it works and it's reliable and it really helps, that risk shrinks right down, and then you know your value versus an expert-based alternative has really gone up then.
Yeah.
Right. So you need to think carefully about how do I get those initial sales, and then how do I convert them into a value capture pricing.
Exactly.
You know, and this gets into this, and again, we could spend a long time about this, but this concept of skimming versus penetration pricing.
Yeah.
Right. So skimming pricing is basically saying there's some potential customers, some prospects out there who will get a lot of value, and I'm going to sell to them at a high price, and then I'm going to grow the market by lowering the price as I go. Penetration pricing is I'm going to sell at a low price and get lots and lots of people to use my thing, and then I'll raise the price over time. Each of those makes sense in different scenarios. So with SaaS software in particular, if there's not much training required, and if using it shows that you'll get value, and if there's a value capture mechanism on the back end, then penetration pricing, starting with low pricing, can make a whole lot of sense.
Exactly.
So we have a whole framework for working through this, but just exposing people, breaking it down into the pieces and expose. This is a lot of what we end up doing is just exposing these things and making people think about them in a structured way. Makes it all of a sudden lots of things where the conversation goes around in circles narrows down to we should do that. Or, we should decide on these. If we believe this, we do this. If we believe this, we do that.
Yeah, exactly. Yeah. Okay. I think what's interesting about the topic of pricing, I think you mentioned this already at the very start. It's a very comprehensive subject.
Yeah.
There's a lot of people involved from different disciplines. It is something that you should really embed in your organization. Yet it is very, let's say, thin layer on an operational level. So how do you make sure that you operationalize this actually within your organization?
Yeah, so this is always a big. It's interesting with the scale-up companies, right? So they've got their initial sales. Maybe they've got their ARR is 1 to 10 million. Let's say it's in that regime, and they go from the CEO or the head of sales essentially doing all the pricing, especially when it's a negotiated sale, right? It's a bit different if you're selling online, but if it's a negotiated sale, you go from one person to all of a sudden you've got a sales force and they're having to make decisions.
Yeah.
And now all of a sudden
you delegate a mandate. Like a delegated mandate.
Yeah, delegated mandate. Yeah. And now you've got this problem of you've got people out there who don't understand it as well as you do, right? They just hired them in, and 6 weeks in, they're out in front of customers talking about your product. So you want them to get the value proposition right, but you also get how much should they negotiate and when should they give it away, give discounts and when not.
Exactly.
And this is actually the challenge where I, in some sense, started my pricing career. Is the big company problems, right? So I worked at a $15 billion company who probably has 3,000 salespeople altogether, and they're busy giving away unnecessary discounts every day. So that's when you've got more to think about the operationalizing it. I think a lot of scale-up companies. I think you do a lot of this in the other domains, right? In the sales and marketing domain, is you take them from the 3 expert sales guys into the 30 more scalable
team-led organization.
Team-led organization, exactly. So from a pricing perspective, what this looks like is just being on top of your pricing and understanding it in a deep way first from the core, but then setting price targets and price floors. And a price floor, that's the sort of minimum you say you're going to sell at. It shouldn't really be the minimum. It should be when you actually start to you treat it like an exception, and then you decide whether it makes sense.
Yeah, so actually I think you also managed it at the start. It's important to write it out and to actually develop a bit of a pricing policy, even though it's just a few bullet points and a few, let's say, like pointers that everybody should work with. It's important to document it and to probably also review it from time to time, right?
Yeah, I mean, a price policy can be 100 pages or it can be 3 bullet points, right?
Yeah.
And better to go to 3 bullet points than 100 pages.
Mm-hmm.
But sort of in a sense, the core of it is this notion of a price corridor. So what net price do I want to end up with?
Yeah.
And that you can be more or less sophisticated in the way you execute on this, right? So it can be by different customer segment for different product, blah, blah, blah. But you can also just do it at a very crude level. And the idea is what you're trying to flag is when do I need to pay attention because something's off the rails here.
Yeah,
right.
Exactly.
And that's the mindset. And then you're giving guidance. The very act of having different guidance for different products or different customer segments, to do that, you've got to have thought it through. But you're basically then communicating to your internal team where the value is and where there's less value, and therefore how they should think about doing the pricing. How much they should negotiate.
Yeah.
But it's that level of the main thing is that sort of process and level of a little bit of discipline goes a long way.
Yeah.
If you just tell your sales guys to go sell, they will sell.
Yeah, exactly.
You may not like the pricing, but they will sell.
And pricing is a hurdle then probably.
And sales guys don't like pricing,
no,
right?
Exactly.
There's a very common expression, right? Sales people win deals and pricing loses deals.
Yeah.
And that's obviously rubbish. But that comes from a sense that I'm sure you have this in your selling methodology, but there's the sales rep who sells the most is not your best sales rep. The sales rep who sells the most at the high price is your best sales rep.
Yeah, of course.
So then what is a high price, right? Well, if you are selling to one customer may get high value, so a price of 100 may be a horrible price for one customer, and a price of 90 may be a great price for another customer because of how they will use your product.
Yeah, segmentation.
Exactly. But this is a relatively subtle concept. If you're just a sales guy, you can't just sell everything at 100 or sell everything at 90, right? Because sometimes you're too high and sometimes you're too low. So you need to think that through and then simplify.
And how do you make sure that this policy is actually communicated well and lived throughout the organization, especially if you have to deal with nuances of different segments for which you have different pricing policies, essentially?
It's about, say the question again.
So how do you communicate this effectively throughout the organization and make sure that a sales rep knows how to deal with different segments and that he or she knows how to apply the pricing in practice?
So again, big topic, but at the top level, the concept of value and pricing should be embedded all the way through the commercial process, right? The product design, the marketing, and then into the selling process. And then there's the techniques like the price corridor in terms of the sort of metrics. You've got to measure things as well, right?
Yeah.
So understanding the value you're delivering is super important. I see many companies, many scaled high growth companies where they don't spend enough time convincing their customers of the value they're adding. And this is especially true when it's a product that sort of helps a little bit of the process. So if you help this little bit of the process, then if this team gets 20% more efficient, that might be worth a huge amount of money. But there's a really good chance they don't
understand.
They can't quantify it.
No, exactly.
Right. They will say we love your product, but they won't say how much they love it in dollar terms. So you then have to help them by quantifying those things, right? And then of course that feeds back into the sales cycle, right? Because if you can quantify it, then you can stick it in your marketing campaigns. You can do a little value calculator.
Yeah.
So it's really this value mindset that you need to instill into the sales team.
Yeah.
And it sounds really obvious, but it really gets lost a lot of the times because they spend their whole days with customers complaining about how the product is too high priced.
Yeah.
And then they end up in these reactionary conversations where they're reacting. But no, they need to be setting the conversation about the value in a credible way.
Clear. And how do you see pricing work in the current macroeconomic environment? Because there's obviously, you mentioned this at the beginning already, there's also an opportunity here actually in inflation, in dealing with uncertainty, to help companies make the shift from top line growth to profitability. How would you advise founders to look at inflation or other types of uncertainty in the market?
Yeah. Well, so maybe one thing is don't be afraid of pricing. That's the sort of starting point, right? Everyone's very afraid around the pricing topic because they're worried they'll push too hard and then their sales will collapse. So don't be. But also you've got to have a bit of guts, right? If you never say no to price, then you don't have a pricing strategy. Is one thing. But in the current environment, really, what the tide's gone down a bit, and what that's done is exposed the rocks that people were making mistakes, right? When economic times are good and markets are growing and funding is readily available and investors give you lots of leeway, you can get yourself a long way into rocky waters and not even know it, and then the tide goes down and all of a sudden you realize you're a bit stuck. So it's never the wrong time to make sure your pricing is good, because when overall profits go down, then you don't want to be throwing away any money because your pricing's not right.
No, exactly.
Right. So that's part of it. The other thing is that it's more dynamic now, so things are changing. So you need to be really on the ball of what's going on. So when we looked at the value you bring, right? So the value may have changed if your competition has lowered their price or raised their price for that matter, right? Then your relative value to that has changed. So assuming you're not the market leader, and most of these companies are not, then you need to keep track on that and you may need to react to that. Risks may have changed, right? They may perceive you as more risky or less risky now.
Yeah, exactly.
But things are more dynamic, so you've got to keep on top of things more. It doesn't really change the basics. It just means you've got to be more on top of it.
Yeah.
Because losing $1 of profit a year ago may not have felt that serious, but now it feels much more serious because your overall profits have collapsed. So
exactly.
Your losses are even bigger.
Yeah. So you're saying again, actually start with the customer in mind and work your way through, what competition is doing, what the trends and developments are, and then make an informed decision about how you're going to adjust your pricing and not just one-on-one correlate your pricing to inflation.
Exactly right. That's right. So that convert mnemonic came, that can be a useful, in a sense, a checklist, right? What's changed here? Maybe the next best alternative has changed.
Yeah.
Maybe the value's changed. Maybe the risk perception has changed, right? They're not. If you're selling something new and bold, this may be the wrong time for the customer now, and so their risk profile's gone up, and so you've got to try and do something about that. But these things are much more in flux at the moment than they were, let's say, 2 or 3 years ago was pandemic, but before that.
That makes sense. A lot has happened.
It's been an interesting few years.
For sure.
I don't like this interesting, but it's been an interesting few years.
Yeah. I really appreciate and like the methodology that you have crafted to get started with pricing, A, to determine what is the ideal pricing level, B, to also determine, how should I operationalize this within my organization. We will for sure share this also when we publish this podcast and the blog article supporting it. On a very practical note, like what would be your final learnings or best practices that you would like to share with early stage founders?
Yeah, so I was going to sort of the top things to worry about is, first one is be really clear on who you're selling to and what value they will get versus their next best alternative from what you're selling, right?
Yep. Step one.
Step one, yeah. Because if you don't have that, then you're not going to get your pricing's not going to be very good. Second will be don't leave the pricing till the end. Pricing should not be like step 7 in an 8-step go-to-market strategy, right? It should factor in different ways, but it should make its presence felt all the way through that process. High level, conceptual at the beginning, very practical at the end, and more effort at the end. But I see lots of R&D development efforts where it's not. If you think about it hard, you're like, where's the value? Is the real value in this innovation or not? And of course, they get to the end, and then it's a bit too, they wasted a lot of time.
Waste of time
money,
and resources.
Yeah, and you don't need to figure out your pricing. You just need to figure out there's value.
Yeah,
if you can figure out there's value,
then you will figure out the way to claim
pricing.
it.
We can get later.
Exactly.
But if the value is in any doubt at all, you should really spend a bit of time on it relatively early on the process, right? And I think the third tip, it sounds really dumb to just say this, but write it down. So that one of the biggest issues I see with companies around pricing, and I mean, I talk to lots of companies where it's a topic that just spins around and around and they never get closure, and they try different things, and we're on our fourth pricing round and we still don't know what we're doing. Oftentimes that's because there are disagreement inside the team on some fundamental beliefs about why the value that they're delivering or who they should be selling to. And if you write it down, then people can see where the disagreement is, and then you can go work on it, and you can do the research or you get the effort to figure it out.
Exactly.
But writing stuff down so people can disagree with you and you know where you are, hugely important in the pricing space.
So that it doesn't leave any room for interpretation or arbitrary.
Well, it's you and I, if we were on the same team and we have different opinion about where the value is, so you think it's an efficiency thing and I think it's an effectiveness thing.
But that's fine, you should have that.
We're going to have very different ideas about the pricing, but we may be arguing about the pricing when we should be arguing about the core value.
Yeah, exactly. Yeah.
So that's
a good tip. Ian, thank you very much. It was great to have you here and share your thoughts and the best practices on developing pricing for early stage companies. Thank you very much, and more will follow.
Thank you very much. Pleasure to be here. Always fun to talk about pricing. And of course, I'm happy to learn more about people's pricing problems. I'm a pricing geek.
For sure. Ian, thank you very much. Have a nice day.
Thank you.